Hello?
Yeah,
Yeah, we
it's
can see
visible.
the question paper.
Yes, the question paper. Let's see. Remember, we are going to note the following things. The vehicles that were purchased, the vehicles that was, or the vehicle that was disposed, and the remaining vehicle after disposing, right? Those are the things that you must look at when you are preparing asset disposal. When you get an asset disposal question where you are required to prepare vehicles account, accumulated depreciation on vehicle account, depreciation, asset disposal. So you need to look at the asset that was disposed or sold. And then you also have to look at the remaining vehicle after and the new vehicle that was purchased. That's what you're going to calculate depreciation for, and that's what you're going to record in the vehicles account. I hope I'm clear. So we are going to look at that. So let's go through the question. As Pringle Traders, the following transactions with regards to the vehicles of Pringle Traders took place during the year. The latest financial statements on the 31st of December 2003 showed the carrying value of the vehicles as 202,500. The cost price of these vehicles was 360,000. And depreciation is written off as 15% per annum on the diminishing balance method. Make a note that diminishing balance method is also called the reducing balance method. If they don't say diminishing balance method, they will say reducing balance method. You're going to use the method that I'm going to give you when you're calculating depreciation using the diminishing balance method, or the diminished balance method, or the reducing or the reduced balance method. It's either they will just play around at those terms. You should know, okay, like the straight line method. Straight line method, the other name for it is cost price method. You should know you're using the same thing. So with diminished balance method, the other name is reducing balance method. I hope that's clear. Just make a note as well. A vehicle purchased for 160,000 and accumulated depreciation on the 1st of January 2004 is 39,300 was traded in on the 31st of October 2004 and a new vehicle at BMW Motors at a profit of 3,500. The new vehicle cost 222,000. Draw up the following ledger accounts properly closed off or balanced off for the year ended 31st December 2004. Vehicles account, accumulated depreciation on vehicles, depreciation, and asset disposal. Right. So now what we're gonna do, I'm gonna go straight to the answer sheet. We try to answer. Right. We try to answer the questions that are there. But to answer the questions that are there. Okay. I'm going to close this, stop sharing this, and then I'll share the answer sheet where we're going to work. Yes, that's where we're gonna work. Right? Are we fine? So I just want everyone to be able to access the question while I'm doing it. I just want you guys to see the question while I'm doing it. Okay. Firstly, we're going to start by preparing the vehicles account. Last week, if you checked, those who I did with them last week, where there is creditors control, there was bank. because we purchased the new vehicle for cash, right? But anyway, it's fine. Don't worry. Now, let's proceed. We need to record, firstly, we're going to determine the opening balance of the vehicles, right? How much is the opening cost price? Opening cost price of the vehicles. That you can see.
36,000.
360,000.
360,000, I mean.
Can everyone see that? Or maybe we should start by...
Yeah, I can see it.
Or maybe we must start by determining the period. Or okay, our period ended when? 31st December. Remember, we see or this is an opening because of the date, right? We can't determine that without the date. So our year end is 31st December 2004. Then our year started when? When did our year start? Our year started on the 1st of January 2004, right? Are we on the same page? Don't mute that much too much. You must engage. I just want to know if people are with me. So it means 2003 is the previous year. And the previous year amount is going to be the opening balances of the current year, right? So that's why if you check, they are saying the latest financial statements on the 31st of December, which is the closing period of the previous period, showed the carrying value of the vehicles as 202,500. The cost price of these vehicles was 360,000. When? On the 31st of December 2003. When we go and open the following year, which is our new year, on the 1st of January 2004, that 3,600 was closing previous year is going to be an opening in the current year. That is why 360,000 qualifies to be our opening balance. Are we together?
Sure.
Yeah, just to explain so that people can know, no, we're not just recording. We don't just guess an amount and record. We follow the date. All right. So now, therefore, they continued and say to you, a depreciation is written off at 15% per annum. But now we're not yet calculating depreciation. We need to record the vehicles that we purchased and the one that we have disposed, right? So let's go to the next question. It says a vehicle purchased for 160,000 and accumulated depreciation on the 1st of January 2004 of 39,300 was traded in on the 31st of October 2004 on a new vehicle at BMW Motors. So they are saying to us, the vehicle that we purchased, that we have purchased on the 1st of January 2004, we have traded it in, right? So when we trade in, we're going to record the cost price here. We are going to record the cost price of the traded in vehicle, not the amount that we received when we trade in, no. Or not the cost price of that, or not accumulated depreciation. We're going to record the cost price of the traded in. How much is it? Are we there on the question paper? Or should I read again?
Isn't it 39,300?
No. Remember I said to you, I'm saying to you, we are going to look at the cost price of the asset that we have purchased.
Okay.
Not the accumulated depreciation, not the price that we received when we dispose or whatsoever. We're going to look at the cost price of that vehicle. That one of 39,000, if you check, it's an accumulated depreciation at the beginning of the year. We need to record the cost price of that vehicle. How much is it? It's 160,000. Can you see it there? They say a vehicle that we purchased. Yes, that we purchased for. That means that amount is the cost price that we've purchased for. The day we purchased that vehicle, we need that cost price. Even if we would have purchased it 10 years ago, we need that cost price. I don't know if you get my point.
Yeah, I get you.
So that's why I say you need to look at the cost price of the asset that was disposed. Why? We are preparing a vehicle account, which is an asset account. When we dispose it, it means you are taking that cost out. So you know that asset account decreased on the credit side. That's why we have to decrease that 160,000 rand on the credit side, because we have disposed it, we've taken it out. I don't know if that makes sense. So we need to know that we are recording the cost price there. Everywhere in the vehicles account, we're going to record the cost price. So now we process and say, they said they traded in for a new vehicle, right? A new vehicle, it's 222,000. If you remember, those who were here last time, we had a cash price that we paid. Do you remember? But this
Yeah.
time we don't have a cash price that we paid. So we're going to record that new vehicle, of which is an addition of vehicles of 222,000 there as a new vehicle that is on creditors' control, because we didn't pay anything. We just traded in a vehicle, an old vehicle, and pay nothing. That is why that vehicle is on creditors' control. The new vehicle that we purchased for with the process of trade-in. I don't know if you get my point. If you don't get my point, please make sure you get me right.
I'm lost. I'm lost
lost.
here, Dolens.
Okay.
You said the 222,000, it's coming from, I can see on the question, it's the new vehicle cost.
Yes.
But I'm lost through the creditors control. Why is it creditors control?
It's creditors control because we did not pay the BMW. Right?
Oh, okay.
We just took our old vehicle and say we are trading in, give us this vehicle. And then they said your new vehicle will cost you 222,000. They gave us, but we didn't pay. Remember when you trade in, right? You take an old vehicle and then top up with the man, right? And get a new vehicle. For example, you are using Samsung phone and then you've been using it for 2 years. When you get there and trade in, they tell you, no, the cost price of your vehicle, of your phone, you purchased it maybe at 2,000. They tell you, okay, at this time, since your phone has lost value, and you need a new phone, we are going to give you an updated phone, an upgraded phone, which is maybe can be 2,500. Then you give them that one, and then you have to top up with 2,000 cash. I don't know if you get my point.
Yeah.
Therefore, in this case, if you do not top up the 2,000 cash and then they give you the phone, it's on credit. Then you are owing those people. So the same here. We as a company traded in a vehicle that is old. We have to top up certain amount for the new vehicle. We did not, but they gave us the vehicle. So we are owing them with what we call creditors. Remember, creditors are people that we owe. So we are owing someone. If maybe we paid everything, we gave them the vehicle and top up with cash, there's going to be bank there. But because we didn't pay anything after giving an old vehicle when we trade in, therefore, creditors control.
Okay.
You get it?
Yeah, 100%.
Okay. So always you need to think of all of these things when you're in the exam. Okay, what might happen here? What must I do? What exactly happened? You must get the right scenario in your mind. They won't give you everything in accounting, but you need to get the right scenario in your mind. Okay, this is what is happening, and then you guys need to do that. But anyway, I hope you understand. So let's proceed and calculate the total. The bigger side is the credit, is the debit side. Yeah. Let's close off our vehicles account. Let's close off our vehicles account. How much is the debit side?
It's 582.
582. Is everyone getting 582? I'm getting that. I believe it's correct. But
yeah,
is everyone getting that?
Yeah, it's the same amount.
Okay. After getting 582, you bring it this side again, right? And then you bring it on the credit side and then take 582 of the total, you minus the 160,000 of the asset disposal on top there and get the balance carried down. The balance carried down, balance CD there. How much is it here?
It's 422.
It's
422.
422,000.
Yeah.
Right. Now we're done with our thing. So this is the closing balance of 2005. And then if you see this date is the opening balance of 2005 in the following year. It's going to be this closing. We're going to take this closing and put it there. We indicate this is going to be our opening balance for next year because it's the closing for this year. As much as I was explaining in the beginning, the closing balances of the previous year is the opening balances of the current year. I mean, of the following year or the current year. So I hope you get that. So here we're done with our vehicles account. Can we proceed?
Sure, we
Are
can.
we fine? Okay, now that is an easy account to prepare. You don't get zero there. If you get zero there, that means you know nothing. And you won't survive going down there. Going this side is very tough. But it won't be tough if you're going to listen to me properly. Now, the main account that you must prepare that will get you to the right answers when you prepare asset disposal and depreciation account is you must get your accumulated depreciation account right. Once you get that one right, nothing is going to be impossible. So now, firstly, before we do anything here, we need to go and calculate. We need to go and calculate depreciations. Depreciation. So what I want to advise is that always when you calculate depreciations, start with the new vehicle because it's an easy one. Let's start with the new vehicle that was purchased. Remember, we're going to focus on the date. That's where the date is coming. And always when you calculate depreciation, I want you to do your own summary. Your own summary. So firstly, I will say depreciation is calculated at this method, diminishing balance method, right? So the method is cost price multiplied by the percentage given multiplied by bro, cost price given depreciation is the diminishing balance method, ne? Cost price minus accumulated depreciation minus accumulated depreciation. Then you will get carrying value. So it means you must first calculate the carrying value. After getting the carrying value, you are going to multiply by the percentage provided, multiply by number of months, which is n, you divide by 12. And then you will get your depreciation. Then you'll get your depreciation. Is that clear? The diminishing balance method is it's like this. You calculate the carrying value first. After calculating the carrying value, you multiply by the percentage given. You multiply by n, you divide by 12, you get your depreciation. So now, let's go to our new vehicle. Our new vehicle, I always want you guys to use this method. Determine the cost price because it's needed there. How much is the cost price of the new?
New vehicle.
Mm-hmm.
It's 222,000.
22,000. Okay. And then let's determine the accumulated depreciation. How much is the accumulated depreciation of this vehicle?
It's 39.
The new vehicle. The new vehicle does not have depreciation. It's still new. It doesn't depreciate it at all.
Yeah, it doesn't have.
So it's 0. Right? And then the method. This is what I want you to do when you're in the exam. Before you calculate anything, you know I'm going to take this one there. I know this one is there. The method is diminishing. I'll just say like that. It's diminishing balance. I'll just put it like that. Right? And then what else? we need the period. How long has it been there in the business? How long has it been there in the business? You need to check. Look at the, let's go back to the question. When you look at the question, they are saying they have traded in.
For 2 months. It has been there for 2 months.
Yeah, they've traded, it was traded in on the 31st of October, right? So remember, it's 2 months, right? Do you understand? It's 2 months because October is already done. We won't include it. We're going to start by November, December. That's why it says it's 2 months. I don't know if you get my point. We won't do, we're going to do November
and December.
Because it's only 2 months. We won't do October because it's at the end, it's done. So we won't calculate that. We'll only calculate for the 2 months that we have utilized it. Then we move. It's only normal that, you know, you buy clothes today. Some of you, yes, you can wear today, but really this, you know, you put them for some event occasions there. So even the car, we purchased it today in the company, maybe we'll start utilizing it the following year, just for example. So let's proceed. So we can calculate this depreciation. I'm gonna put it there, down there. So we are going to say to look at the method, right? The method says the cost price. We're gonna say 2,222,000 multiplied by minus 0 because it's 0, né? Then the carrying value is going to be the equal the amount, the cost price, right? Because it's still new. And then we're gonna multiply by the percentage given. How much is the percentage given to calculate depreciation?
It's 15.
15 over 100 multiplied by 2 is n again. Number of months divided by 5. How much are we getting there? Easy. How much are we getting?
I don't know, but I'm getting the same amount. Oh, I'm wrong.
Same amount, you made a mistake. Check your
I made a
calculations.
mistake. It's 2 divided by 12, 15 divided by...
I'm getting 55550. If I'm not mistaken. If I'm not calculating for the wrong one. Are we all calculating? How much are we getting?
Yeah, I'm getting
222,000 multiplied by 15.
it's
divided by 100.
550.
Multiplied by 2 divided by 12. I'm getting 550. Is everyone getting
Same.
there? So the depreciation for the new vehicle is 55500. Or 010. Yeah, there we go. 5,550. Are we good?
Sure.
Is everyone on the same page with us? Can we proceed?
Yeah, we can.
Okay, now I'm going to calculate, I'm going to make us calculate the for the old, right? Let's go
For the
and
old
calculate
vehicle.
Yes. For the old vehicle. We will come to the disposal after. Or we can do disposal. Let's do the disposal one. It's easy as well. Let's go to the disposal. After new, we go for the asset disposed. The easiest one as well. Right? So here, we're still gonna follow this method. Ne? We need to follow this method. This one. I'm just gonna copy and paste ne? This method. And follow that method for the disposed. I get this one was for new. Now we're doing the disposed. We're still gonna follow this method. How much is the cost price for the disposed vehicle? Guys, it's there. Remember, here, it's there. You see, here.
It's
Remember,
160.
you don't have to take time to think. It's there. Ne? It's there. It's 160. Because remember in the exam, you are facing time issues as well, so you can't be delaying things. Because I know that we determined the cost for the asset disposal. Changing the wrong one. So you guys should know. Yeah. Right. So now the accumulated depreciation. What did I say now? Wrong one. Okay. Correct one there. So now accumulated depreciation is there, is given as well in that question. How much is it?
39.
39.
300.
Is everyone in the same page with us? Then let's go for the period. Let's go for the period. How many months? Now let's check properly. Let's check properly on the question. Or maybe should I minimize a bit and display the question? Or you're fine?
No,
Guys,
I have the question with me, so it's fine.
The period should be.
Okay. They are saying a vehicle
If it's
purchased
about
for 160,000 and accumulated depreciation on the 1st of January 2004 of 39,300 was traded in on the 31st of October 2004. So it means that vehicle was there from the beginning of the year until 31st October 2000.
It's 10 months.
That's 10
The
months.
period is 10 months.
10 months.
Yeah, period
Okay.
is 10
It's
months.
Jan to October. 10 months. Right? Here is 2 months. Sure. Now we can calculate depreciation, right? Now we can calculate depreciation. Everyone agrees, Mr.
Yeah.
Sure.
Sure. So we're going to have to follow the formula. The formula says cost price. We have cost price of 160,000
minus accumulated depreciation is 39,300.
minus 39,300 is equal to. Let's keep moving.
Okay.
How much are you getting there?
Wait.
It's 120. 700.
700. Then we'll say
Yeah, then
1,700
times
15%
over 100.
Yes.
And then times 10 over 12 is equal to 15 088.
15
088.
088. Everyone is getting that amount, guys. I'm getting that as well. Is everyone getting that amount?
Yes, we're getting the same amount.
Okay. Then we're done with the asset
Something you've been
disposal.
quiet.
What's that?
And you can continue.
Oh, okay. Let's proceed the cash up, and then we are done with the with the asset that was disposed. Now we are going for the old or remaining vehicles, right? Agree, we did the new one, and then we did the disposed. After disposing, we're going for the old one or for the remaining, right?
Okay.
So let's go for the where is that? Now we're going to use the same method, but we are going for the remaining vehicle or the old vehicle. Usually they say the old vehicle. So let's see. I'm gonna put old or remaining here. Old vehicle or remaining. Old or remaining vehicle or vehicles. Okay, so now we are going to determine the price of the old. It's going to get hectic a bit, but not that hectic. Am I clear? Not going to get that hectic. You just need to understand. Ne? The old, okay, at the beginning of the year, how much value of vehicles do we have? Hello? How much?
You're saying, please repeat your question.
How much is the cost price? Let me put it like this. How much is the cost price of the
360,000.
360,000, right? So
Yeah.
we have vehicles of 360,000. So we need to say, in order for us to get the cost price of the remaining vehicles or the old vehicles, we have to say open brackets then, and say 360,000 minus the sold or minus the disposed cost price, which is 160,000. I don't know if I make sense.
Why are we taking the 160?
Because that vehicle, it has been disposed. It's out. And remember, the 360 is the total vehicles that we have at the beginning of the year, right?
Oh.
From that 360, we have sold a vehicle that cost, or we have disposed the vehicle that cost 160,000. That's why we're minusing it. That's what I'm saying. Is either going to say the old vehicles or the remaining vehicles after disposal. Do that make sense?
Sure.
Sure. And then we will get the cost price of the remaining or the old ones after disposal. How much?
200.
200,000.
200.
Right? 200,000. Is it fine? Does everyone?
Yeah.
Is everyone in the same page with us? And then
Yes.
we also, okay, sure. Then we also have to calculate the accumulated depreciation for the remaining. So in order for us to calculate depreciation for the remaining, we are also going to take the accumulated depreciation of the old minus the accumulated depreciation of the asset disposal. I don't know if that makes sense. The same thing we did with the cost price, we're gonna do with the accumulated depreciation. So now, I don't know if I make sense before I proceed. Does that make sense, guys? Before I proceed, because I want to make sure that people don't get lost, because this one is a tricky one.
Can you repeat, Bella? Can you repeat? I didn't get it.
Okay. I want us to go back there. Did you get this one? The cost price one?
Yes, I got the cost price.
Yes, we said the opening balance of the old, or the opening balance of all vehicles minus the vehicle that we have sold, right?
Yes.
Yeah, even when we go to the accumulated depreciation, we have to say the opening balance of the accumulated depreciation minus the disposed accumulated depreciation. Am I clear? Let me raise this. Maybe
Yes.
don't worry about that. We'll come back there. Do you understand what I'm saying? It's
Yes.
the same thing that we did at cost. We're gonna do it at accumulated depreciation.
Okay.
So now let's go and check how much is the accumulated depreciation at the beginning of the year, or opening balance of the accumulated depreciation. Let's go back to the question. Let's go back to the question. So if you check there, they are saying the latest financial statements on the 31st of December 2003 showed the carrying value of the vehicles as 202,500. That is the carrying value, right? The cost price of the vehicles was 360,000. That's what they're telling you, right?
Yeah.
So now we don't have the accumulated depreciation, but we have the carrying value and the cost price. And remember, the formula to calculate carrying value is cost price. When we want to calculate the carrying value, we're going to say cost price minus accumulated depreciation. Then we will get the carrying value, right? That's how we calculate the carrying value, right? Guys, I want you to agree or disagree. That's how we calculate carrying value, right?
Yes.
Okay. So now, if you check there, they gave us the cost price. How much is the cost price? It's 360,000. Do you agree with me?
Yeah.
And then they did not give us the accumulated depreciation, but they gave us the carrying value. Of 202,500. Can we calculate the accumulated depreciation? If you can't, I can assist you. For example, I'm going to put these things behind this so that people understand. If they say to you, 7 minus 2 is equal to 5, right? And then now they don't give you 2. How can you get the 2? I'm going to help you. Don't worry. If they say to you 7 minus 2 is equal to 5, therefore they don't give you 2 now. They say get 2. How can you get the 2?
You say 7 minus
You'll
5.
take the cost price and you'll minus it from the carrying value
Are we fine?
to get the accumulated depreciation.
You get it, right? Guys, do you get it? Because I'm trying to show you with a small number. You can see with the small number, you can calculate it while looking at it. But now we have the bigger numbers this side, right? So that's what I'm saying. I'm taking out 2. You're going to say 7 minus 5, you'll get your 2, right? So even this side, in order for us to get our carrying value, we're going to say our cost price minus our carrying value. There, you'll get your accumulated depreciation. How much is your accumulated depreciation?
157,500.
That is our opening balance. of the accumulated depreciation. Then we'll put it there. We'll say 157,500 minus. Now we're gonna minus that. Minus minus what? Minus the disposed accumulated depreciation. You remember? Because I wanted you to say it.
It's
This one.
39,300.
Yes. Then how much is the actual accumulated depreciation after minusing the one that we have sold?
118.
118,200.
200.
Is everyone getting that? I don't want to leave anyone behind, as I said. Are we getting 118,200? So that is our accumulated depreciation for the remaining, right? And then diminishing balance. And then the remaining vehicle is always there from January to December, 12 months. Am I clear? It's always there for the whole year. Okay? So let's calculate our depreciation. When we calculate our depreciation, we're going to say we're going to utilize these ones. Okay. We're going to utilize these ones. The cost price, the new cost price of the remaining is 200,000. So we're gonna say cost price 200,000, right? Minus our new accumulated depreciation after minusing the depreciation, the accumulated depreciation for the sold or for the disposed. 118,200, right? And then we will get the carrying value. Is equal to the carrying value. How much is the carrying value? Then from there we proceed with the method. Let's proceed with the method. How much is your carrying value? If I lost you, please ask. Because this is where the issue is. The most problematic issue is calculating depreciation and making sure that your accumulated depreciation account is fine. Once we get this one right, we're done.
It's
We are
81.
It's how much?
81.
81.
800.
81,800.
800. And then we multiply by 15%.
15 over 100.
Okay.
12
Multiply
over
by
12.
12 over 12. Then how much is your depreciation there? Let's see.
It says 12,270.
12,270. That's correct. Everyone is getting that, then we are right. Now we are happy. Ne? We are done with the new, the sold or the disposed, and then the remaining or the old. We are done with the calculations of the depreciation. Are we fine?
Sure.
Can we go back and record now? Let's go back and record, right? Let's go back and record. How much is the opening balance of the accumulated depreciation? We have calculated it. It's there. It's here. Remember, it's this one. You remember?
It's
157,500.
7,500.
You remember how we calculated it,
This
right?
is literally tricky. Whoa.
Yeah, you must master. Make sure that you don't get it wrong. And if you have realized that this is the problem, that means you must do it again and again and again. Guys, I don't care whether you're gonna practice a million times, as long as you get it right. Because we need to master this. And then now, then they said there's a depreciation that we calculated until the 31st day.
That one is 550.
The one of 5550.
Yeah.
No, not that one. The one from the beginning until the 31st, of which is the sold the disposed one. How much is it? The disposed one. Then we're gonna report the disposed one. Am I clear? We're going to look at the depreciation that we calculated. That was for the vehicle that was there from the 1st of January until the 31st of October. Is the disposed one. How much is it? Guys, remember the disposed. Let's go down there. The disposed is here, 15,088. You remember? It's the one that was there from the beginning of the year, January until October, right? That's why I'm saying we're gonna record the one here, 15,088. Are we together? Are we together, guys? And then when we come here, we're going to record the ones that were there from whatsoever month until the end. That means we're going to have the new there. In brackets, we will have the new that we calculated of 5550 plus the one of the remaining that was there from the 1st of January until the 31st of December, which is 12,270. Those brackets there. We calculate the ones that were there from the beginning of the year.
Dolans, can you go back to the 15088?
Okay.
Yeah, can you please just explain?
You said I must explain what?
The 15088, why are we taking it?
Why are we taking it?
Yeah.
Why are we recording it in the accumulated depreciation account?
Yeah, because it's the asset disposal. Like we said, it's an asset disposal.
Correct.
Yeah.
You know why we're taking it here?
Yeah.
Because it was there within our period. It was there from the 1st of January until October. Within our own period. It doesn't matter whether it's disposed, but we need to record that because it was there.
Yeah, from
in our accounting period from the 1st of January 2004 until December. It was not there the whole year. It was only there from the 1st of January until October. So it was there in our period. We have to record that.
Okay, makes sense.
Yes. So let's go and record these ones. The total of that. How much?
17,820.
17,820.
820.
So yes, then we are done. Ne? So when we come here on the debit side, we need to record the accumulated depreciation of the disposed. Ne? The total accumulated depreciation, like we're going to record depreciation for last year and this year. I don't know if I make sense. For last year and this year, meaning we're going to record the one at the beginning of 3, let me open brackets, 39,300 plus the one that we calculated this year, which is 15,088, because it was disposed. That's why now we need the whole total of depreciation. I mean, accumulated depreciation. We're gonna add the ones that is at the beginning plus the one that we calculated this year. How much? If you don't understand, you stop me. You say I don't understand, then I engage with you. Then we for clarity and understanding. Am I clear?
Sure.
So always know that in the debit side where there is asset disposal in the accumulated depreciation, we need the accumulated depreciation for all the years or depreciation for all the years. That's why we have to take the one at opening of 39,300 plus the one that we calculated this year of 15,088. 15,088, I mean. So it's how much?
It's 54,388.
388.
Yeah.
Okay, then let's proceed. Let's proceed. Now let's get the totals there. The bigger side is which one? Is the credit side. So we want to add 157,500 plus 15,088 plus 17820. How much there?
088 plus 17, 820. 190.
190.
408.
190.
408.
Let me just set my. Sorry, I was just plugging my PCs off. It's battery low, so that it don't shut down here. Okay. You said it's 190.
408.
408. And then even this side, you're gonna bring 190, 408. And then you're gonna say 190, 408 minus this one. Minus that one. And then you'll get the balance carried down, the balance CD there. How much? 190, 408 minus 54388. Is how much?
It's 13. It's 106, 136, 020.
Okay. 136,020. Sharp. We move. Then you know this is the closing balance of this year, and it will be the opening balance of next year. We're done. Then we are happy. Then once you are here, you must know your problems are finished. Once you are done with the accumulated depreciation, your problems are completely done. Right? Because you'll come here and say,
You're doing copy and paste.
And copy and paste. You want to copy this one, right? To there. 3 is at 15088. And then you're going to take this one again. 17820. Then your problems are finished. Then how much is the total there when you add the two? I get 3290.
32908.
908. Right? Then even this side is going to be
32908.
32908. And then your profit or loss is going to be the depreciation for the current year that will go to the statement of profit or loss and other comprehensive income, which is 32908. Right? And then now we can go and prepare asset disposal. But before we go to the asset disposal, are you all in the same page with everyone? Do you understand? Are we all in the same page? Are we all in the same train? Or someone is in the metro rail, someone is in the Gautrain. Never know. If you're in the Gautrain, you are in the same page with us. If you're in the metro rail, please, the electricity can go off there. Are we fine?
Yeah, we are.
Sure.
Yeah, I think we find what's left on my side. I think I need to practice, and I'll send you some other stuff if I'm failing to. Maybe you
Okay.
can. Yeah.
Okay, no problem. Just do that, please. Now, because I'm going to make sure that we have one-on-one sometimes at campus and here. What do you know? And people must be able to engage with me, right? I know nothing, or I know up to here, and I don't know up to here. Then this is where we start. Yeah, well,
That one-on-one on campus, it will be very much important.
Hello.
okay. Yes.
Oh, we can continue.
Oh, all right. I was still clarifying other things with this Adam here, so that we are fine. Yeah, well. So now I'm happy if you understand, guys, and I'm pleading with you that go and practice. So now we are preparing asset disposal. On the debit side, where you see vehicles, you have to put the 160,000 of the, which is the cost price of the vehicle that we sold, of the vehicles that we have disposed or traded in, right? And then this side, you have to copy this one. This is your accumulated depreciation. You have to copy this one. Let me copy it actually. You have to copy this one and paste it here. You see? That's what you must do. That's what I'm saying. Once you are done with preparing the accumulated depreciation account and you are sure it's correct, nothing is difficult. Am I clear? Are we fine? Hello?
Yes, my brother.
Okay, let's go back. I want us to go back to the, what's this? I want us to go back to the question. They gave us a profit there, if I'm not mistaken. So we copy that profit and paste. Oh, they didn't give us. They say a vehicle purchased for 160,000 and accumulated depreciation on the 1st of January 2004 of 39,300 was traded in on the 31st of October 2004. A new vehicle at BMW Motors at a profit of, they give us profit at a profit of 3,500, right? They gave us profit there of 3,500. Can you see that on the question down there?
On the next to the
On the-
new vehicle, like
Look, they are saying they have purchased, they've traded in 160,000 rand a vehicle, right? With an accumulated depreciation on the 1st of January 2004 of 3,900. Guys, are we together? Hello?
Yes, we're together, Dollar. I need you asking about the profit. The profit is given here
Yes, the
on
profit
the
is given,
question
but
paper.
I was just clarifying because some people are not understanding.
Oh,
I was just clarifying. So my clarity says that let's look at this statement proper. It says a vehicle with a vehicle purchased for 160,000 with an accumulated depreciation on the 1st of January 2004 of 39,300 was traded in on the 31st of October 2004. Right? For a new vehicle, we traded in for a new vehicle. When we trade in, we made a profit of 3,500. That's what they're trying to say there. I told you accounting, they won't tell you things straight. You need to create certain scenarios on your own. Are we on the same page?
yeah.
Yes, so that profit is for us after we've traded in. It means we've traded in with a better cost of our own vehicle so that we make profit, including getting the new one. So how much do we have to receive from our creditors control or from our creditors? How much are we supposed to receive? Then you are going to say 160,000 plus 3,500, of which is going to be 163,500. Even this side is going to be 163,500. And therefore, 163,500 minus 54,388, how much?
It's 109
That's 109.
112.
You're saying it's 109.
112.
109 112. Right. Then that is our asset disposal. That's correct. We're done.